We have another article blaming AMC's decline today on this Disney movie Wish that did not do well in theaters. I think that's more of a Disney problem than an AMC problem. Now, here in this video, we're going to get into the data that we're going to be getting tomorrow morning, how that could be important. We're also going to get into everything you need to know in regards to AMC specifically and where I think AMC stock is going next. So we have a lot to get into in a very short amount of time. Hit that like button and subscribe to the channel. Let me know what you guys think about this down below in the comment section. Let's go ahead and get started. So today, AMC stock was down about 1.5% in regular trading, down another third of 1% in after hours. It's being blamed on this Disney movie not doing well. I don't think it's because of that. I think that's more of a Disney problem, not really an AMC problem. The box office, again, just showed the best 5-day Thanksgiving period since 2019. So I think the fundamental aspect of theaters and AMC is doing just fine. I really don't think that is or should be in question here. The problem is obviously dilution with AMC. When there is dilution like this, it's one thing to just get the dilution, get that over with, and Wall Street to price that in. But Wall Street starts to say, hey, are we just going to get more dilution? And then that means more shorts feel comfortable taking on short positions. They say, hey, even if we have to wait a while, even if it's going to be another 3 months, do we think AMC is going to dilute shareholders? And the answer is yeah. I mean, that's kind of what this looks like right now. Adam Aaron is using AMC stock as basically a piggy bank, and that's not the best situation to be in, obviously. So that's kind of what is happening to AMC stock right now. We want to, watch the situation closely. Just make sure that we don't continue to see dilution, because if we do, then you're going under $5. You're going into the $3 range if you were to get dilution again. So we definitely want to watch that closely. Now, what's going to be happening in the markets tomorrow? Let's go ahead and pull up the trading calendar so we can see and run through these data points. So Tuesday is tomorrow. You're going to get S&P Case-Shiller home price year over year and month over month. You're also going to get the house price index month over month and year over year, as well as consumer confidence for November. These will be important, especially consumer confidence for November. That comes out at 10 o'clock in the morning. Fed Goolsbee will speak at 10 o'clock in the morning as well. And then at 10 a.m., you will also get Richmond Fed Manufacturing Index. You will also get Richmond Fed Manufacturing Shipments, Richmond Fed Services Index also. Now at 10:05 a.m. tomorrow, you're going to get Fed Waller. At 10:30 a.m., you're going to get Dallas Fed Services Index, Dallas Fed Service Revenues Index, and then Fed Bowman at 10:45. So from 8:30 in the morning until really around 10:45, it's going to be like nonstop data coming out. A bunch of different data. I expect small reactions to this data. I'm not expecting one of these data points to be super impactful. The one that would be the consumer confidence, right? That's definitely going to be important. And then your Richmond Fed Manufacturing Index and your Service Index. If those come in too good, right, that's probably not going to be seen as a good thing. But that's pretty much it for your day tomorrow. At 1 p.m., you do want to be watching this 7-year bond auction. It says 7-year note auction. It's a 7-year bond auction. That's more along the lines of longer duration, right? It's not a 2-year treasury. It's not a 5-year. It's a 7-year, closer to a 10-year. So it will affect the 10-year yield, and that will move stocks coming tomorrow. Now, 10-year treasury yields today are 4.392%. So you're down about 9.5 basis points today. And that's good. That's huge. That's a huge move for treasuries. And you're now closer to 4% than you are to 5%. But it wasn't enough today to allow the markets to be bullish. Stocks overall in the Russell 2000 were down just under a half of 1%. NASDAQ was down about a tenth of 1%. S&P down about a quarter. And the Dow was down about 0.16%. What you really seen today was the markets have been rallying so aggressively recently. You kind of just seen a relaxation of that, right? You are seeing a longer term cup and handle formation, right? This is the cup, this is the handle, this is the breakout to the upside. You got the breakout, and you've now been sitting just under all-time highs. I personally think this kind of technical formation, this realization of a cup and handle, most of the time will lead you to new all-time highs, and you can get a run above that. I think fundamentally it makes sense why stocks are going higher. I do. It makes a lot of sense. But the stocks that control the indexes are Apple, Microsoft, Google, Nvidia, some of these names. Those names are not direct or affected as much by interest rates. So as interest rates go down, they're not going to benefit as much. As interest rates go up, they're not hurt as much. So a lot of your new monies that were in treasuries and in bank accounts and in cash in the sidelines, that money's being deployed back into our markets, and it's not going into those big tech stocks that control the broader indexes. So what you're seeing happening right now is money is going back into our markets, and you are getting some stocks that are benefiting a lot. Like my portfolio was green today. I'm in a lot of your interest rate sensitive companies where a lot of this money is flowing into. But your indexes were slightly red because money is actually flowing out of some of your big tech stocks, rightfully so. That makes a lot of sense. So I'm not expecting a huge blow off top kind of index level rally. I think right now you want to be a stock picker. I think if you are a stock picker, you're going to be doing a lot better in 2024 than the broad indexes. So I think that makes a lot of sense, at least to me, because a lot of stocks were in the green today. Not AMC, and that's because of this dilution. And I think AMC could fall a lot further from here if we do not see a rebound above $7 per share. That's obviously a story that is to be continued, and we'll have to wait and see what happens. But as of right now, it's not looking all too promising. I'll just be 100% honest with you on that. Now, if we take a look at the technicals, it's just a slide really from 1150 from where we were back in the beginning of November, which wasn't even long ago. It was like 2 weeks ago. You're now at $6.75 after this almost 1% decline here in after hours. It doesn't look like you're getting back above 7, and that doesn't look that great. The RSI at 32.39, that's close to going under 30, close to being oversold as well. You're technically definitely on the oversold side of things right now, and the MACD is now negative on the MACD line as well as the blue signal line. So that is looking quite negative now here as well, but still could decline a lot more if things were to get worse from here. I think personally right now, if you have a large position in AMC, it's not a bad idea to diversify your portfolio a little bit into interest rate sensitive companies that should benefit in 2024. I own a Fubo, I own SoFi, I own Tesla, PayPal and Square, Crocs, Dollar General, all kinds of different names that will benefit from rates going lower. Different stocks have different risk to reward profiles. Like a Fubo could 30x over the coming, couple of years here, next 5 or 10 years or so. Tesla's going to have a lot harder time, 30xing, but it's a lot safer than Fubo. You're not going to lose all your money like you could in Fubo. So I think that makes a lot of sense right now, diversifying a little bit, waiting instead of continuing to buy more AMC at this point. That does kind of make sense to me to diversify just a bit. Now, let's get into some of the numbers here for Ortex. You do have a short interest percentage of free float at 9.47%, so that's actually increasing a little bit. $129.24 million worth of short positions in AMC stock. Days to cover, 0.78 days, and then you have 18.73 million shares that are currently sold short. Shares out on loan 16.08 million, cost to borrow 1.45%, utilization of 37.55%, and a short score of 57.15 out of 100. Now let's take a look at the option activity for the day as well. I like to do this each and every single day, and it looks like you only had one trade from hedge funds and institutions today that got flagged here. It was that December 29th 650 put worth about $30,000. You do have open interest this week on the call side of about 65.78%, open interest on the put side of 34.22%. Call volume today of 67.56% and put volume of 32.44%. So puts call ratio of open interest of 0.52, basically a 2-to-1 ratio, 2 times as many calls than puts for this week. And puts call ratio for volume was a little bit over 2-to-1, a little bit more than 2 calls for every 1 put that was being bought today. So definitely seeing a lot of bullish people in the options market for AMC. Continues to be that way, even though the stock continues to fall. I do think there is just a huge pressure of shorts that are constantly tearing this stock down, that are just hiding their short positions. Let's be honest. These short positions are being hidden. I do not think the short interest is, 9.5% or so. I think the short interest could be 500+% in AMC stock. That's just my personal opinion based on covering this stock for years and some of the manipulation that we have seen that I think is continuing to be ongoing. Now, for December 1st, you have calls in the money 2,048, calls out the money 66,481, puts in the money 13,602, puts out the money 22,041. So there is definitely some activity here on the both sides, but really on the call side is definitely outweighing. So I think at any time, even though I'm not exactly super bullish on AMC right now based on what we're seeing today, that can obviously change. If you get above $7 per share, then I think you could get quite an oversold bounce. But I can't say that with confidence until we're above $7 per share. And today, wasn't exactly a good, there wasn't exactly a reason to be super bullish today. But in a way, there kind of is. The Beyonce film's going to theaters December 1st. You still did have the best Thanksgiving holiday week since 2019. So what? Disney flopped. Disney flops all the time now. And that was just seen as basically an excuse to sell AMC stock. So it's tough where we are right now. I do think if you are concerned about AMC stock falling lower, maybe selling stock's not the best idea. I'm not a financial advisor. I'm not a financial planner. Obviously, it depends what kind of losses you have, what your position looks like, what your outlook is, your duration, all of that. Come to your own conclusions. But I do think diversifying your portfolio into some other stocks probably makes a lot of sense right now, so you don't completely miss out 2024's great shift of capital that I think could be aggressive. I think a Fubo, SoFi, a PayPal, even a Tesla could 2 to 5x next year. Now, some stocks could do way more than that over coming years, but next year you could see a multi-100% gain for most of those names. You don't want to miss out on that necessarily. If you don't want to sell your position in AMC, I get it, right? I'm not selling, but I've been diversifying my portfolio. I've been buying other stocks for many years. I've always owned different stocks. I've never been 100% in AMC. So that's just me personally. Take that for what you will. Let me know down below in the comment section. But maybe it is time for some people to diversify. If AMC goes to $3 per share, while Fubo goes to $10 per share, that's a problem. And the only thing that will stop AMC's decline at this point is Adam Aron committing to not sell any more stock. I think he should commit to not selling any stock until at least the second half of 2024 at this point. I hear nothing. I don't see Adam Aron doing that at all. He's just not. So that is a problem as of right now. Let me know what you guys think about this down below in the comment section. In the meantime, hit that like button and subscribe to the channel. Thank you guys for watching. If you guys want to come trade with us live in real time every time we do make trades, link down below in the description of this video. that's it. Thank you for watching. I will see you in the next one.